All right. It's 6 p.m. on December 19th, 2023. Calling the City Council special meeting to order. Please call the roll.
Councilmember Baker.
Here.
Councilmember Curley.
Here.
Councilmember DeMonico.
Here.
Mayor Kleinfeld.
Here.
Councilmember Poshadlik.
Here.
Thank you. Moving on to hearing of the public. Would anyone wish to be heard? Would anyone wish to be heard? Seeing none, closing the hearing of the public, moving on to new business. Fiscal year 2023 audit presentation. Ms. Walton, how do we want to start this?
I think Mr. Blum is connecting the presentation for plant room.
We can give it a minute. Sorry, we just jumped right in without asking if everyone was ready. Whenever you're ready.
Ready to go? Okay.
Yeah,
I don't know if
sure.
anybody wanted to say anything. All right. Well, good evening, everyone. Thanks for having us here to discuss the results of the June 30, 2023 financial statement audit and single audit. So my name is Tim Sananju, partner on the engagement, and with me is Stephanie Atkinson, manager on the engagement. And before we get into the deliverables and the presentation that we have for you, I just wanted to thank Randy and his team. So we were able to complete the financial statement audit and the single audit, which included testing 2 major programs this year on time. Everything was in great shape. Everyone at the city was great to work with, very appreciative of everyone's help. So our plan, similar to prior years, would be to go through the deliverables that we have and then walk through some of the highlights in the financial statements. And then as we get to some highlights that are also covered by graphs, we'll hop to the graphs. And so we may do a little back and forth here between the statements and the graphs, but that way we can, when we talk about a certain topic, we can then look at the trends. So on slide 1 here, Randy, if you can advance it 1. And I understand you have hard copies as well, so I'll keep moving here. So we do have 3 deliverables as part of the audit. We have one, and maybe the most important, is the annual comprehensive financial report. So that is the financial statements. We have the audit of federal awards, and then the end of audit letter. So on the financial statements, we did issue an unmodified opinion, and so that's the highest form of assurance that we can provide. It means that the numbers, the disclosures within the financial statements are accurate. As far as overall results, as I said, the audit went really well overall. Everything was in good shape. We did have one finding that's disclosed to you, actually in the back of the single audit report. It is a repeat finding from last year, and it has to do with payroll segregation of duties. And so there is someone that can add employees to payroll and update change banking information. And so it is something that the team is aware of, and they're looking now at resolving that segregation of duties issue. With the audit of federal awards, similar to the financial statements, we did issue an unmodified opinion. As mentioned, we had to test 2 programs this year. One was ARPA, and then the second was the Drinking Water State Revolving Fund, and for both programs, we didn't note any compliance issues. And then the third deliverable was the end of audit letter, which includes the required communications with you as a governing body. And besides the payroll item that was a finding, we didn't note any other significant issues within the audit, and so a lot of what's in this letter is no disagreements with management, no difficulties encountered, things like that. The 2 things that I will point out, we do discuss estimates, and so the 4 that we do disclose here would be pension liabilities, retiree healthcare liabilities, claim liabilities, and then the unbilled water and sewer receivable. And we point that out because those are things that we can't agree to a hard transaction, and so there are management estimates, whether it's through the use of an actuary or looking at historical information or information that's known subsequent to year end. But we were able to evaluate the assumptions and the factors used to determine those estimates to conclude that they are reasonable. And then the second half of the letter that I won't cover in detail here, but it does include information on legislative items and some upcoming accounting items that I'd encourage you to read at your leisure. So moving down on this slide here, just a couple highlights that we'll cover in a little bit more detail in the slides. The general fund balance did increase by $155,000 this year from $13.2 million to $13.3 million. The city actually budgeted a use of fund balance of $3.2 million, and so we had a positive budget variance of $3.3 million. We do have a few slides that will cover the revenue and expense trends over the last 3 years. And then from a legacy cost standpoint, at year end, both the pension system and the OPEB, retiree healthcare system, were both 45% funded. And we'll get into a little bit more detail on those as we work through the financial statements. So with that, any questions on that before I invite Stephanie up here to talk through some of the financial statement highlights? Okay.
Does anyone have any questions? Go ahead.
Hearing none.
Good evening. All right, so this first slide is going to go over general fund. So if you have the financial statements in front of you, I'll have you flip to page 14. So briefly, I'm going to cover the balance sheet for the governmental, for general fund. Just some highlights. So in the prior year, assets were about 20 million, but that included about 3.3 million of ARPA funds that were being held in cash, and the other side was unearned in the prior year. Those ARPA funds were spent in the current year, so that's where you see that decrease. Just another thing that I'm going to point out on the balance sheet, it was new last year. It was the lease receivable. About halfway down the assets, you have about 1.7 in leases receivable. The offset to that is down under deferred inflows on the balance sheet. So you have about 1.6 of deferred inflows that will be recognized as revenue over the course of those leases. Going down to fund balance, we have another slide that will cover this in a little bit of detail, but you can see the breakdown between non-spendable, one restriction, and then most of the fund balance is committed. And then there was about 2.8 million of unassigned fund balance. So then I'm going to have you flip forward a couple pages to page 16. And this is the statement of revenue and expenditures and changes in fund balance. So then on this first slide here, I'm going to go over the trends for general fund revenue over the last couple of years. SMORSA revenue is up about 6%. And then you'll also see that property tax growth, that growth trend has continued. Total state and federal revenue remains elevated. There was a little bit, you'll see that ARPA revenue was recognized in the current year. So that's some of that increase that you see there. That gets us to the 8.8 million in 2023. Fines and forfeitures remain up as well. And then if you look at other revenue, there was an investment swing in 2022. So 2023 is a little bit more comparable to 2021 and normal. I'm going to have you flip to the next slide. All right, so this is going to be covering general fund expenditures. They are up about 10% over prior year, but that includes, there was about 900,000 spent in building additions, and then there was also another like 900 spent on a pumper engine, and then that will include some inflation as well. And then I'll have you flip to the next slide. All right, so this slide's going to cover our general fund balance. As you can see, okay, so this is our expenditures in relation to fund balance. It was about I believe it was about 30% of fund balance, which is a healthy amount of fund balance to have. And then I'm going to have you flip to the next slide. And then this is going to get into our fund balance classifications. As you can see, much of the fund balance is, okay. Much of the fund balance is committed, that's based on the city's fiscal management plan. There is a little bit, about a little less than 100,000 that is restricted, and that was related to the opioid settlement that was received during the year. That was restricted for healthcare. And then you can see the remaining 2.8 is unassigned, which is good. It shows that you are maintaining that fund balance. Overall, general fund balance is up about 150,000 over prior year. And like I said, city's doing a good job of maintaining that fund balance over the last few years. So then in your financial statements, I'm going to have you flip forward to page 19. So this is essentially the operating statement that's going to have your water and sewer fund. And I'm going to have you flip forward one slide in the slide deck. So looking at operating revenue, that has remained relatively flat over the last 5 years. Expenditures have for the last few years kind of been increasing, a little bit less in 2023. Working capital is about 6.1 million, and most of that is related to ready to serve. So if you were to back that out, you're closer to a break even in the water and sewer fund. And then we're gonna get into the footnotes. So the first footnote I'm gonna cover is on starts on page 39. It's your debt footnote. So if you look at pages 39, 40, 41, this is going to list out all of your debt issuances during the year. You're going to see that you made your payments in accordance with your maturity schedules. So those were all made on time. You will see on page 40, there was one addition related to the state revolving funds. That was tested as part of the single audit because those contain federal dollars. Next, I'm going to have you flip forward. We're going to cover pension, but I'm going to have you flip all the way back to the RSI, which is going to start on page 61. So if you are looking at the column that says 2022, that's really what we recognized in 2023. The valuation is on a one-year lag. But overall, if you look down at the bottom, a little closer to the bottom, it shows you the city's net pension liability. It was about 53.2 million, which is up a little bit over the 43 million in the prior year. Up a little bit on the page where it shows the changes in the plan fiduciary net position. There was about a 5.8 investment loss based on timing. So this was as of 12/31/22, since it's on a one-year lag. So that does even out over time. So this next valuation, which would be as of 12/31/23, I would imagine that's going to even out a little bit there. I'm going to have you flip to the next page, which is going to show the contributions. So this will show that you had about 5.1 in required contributions, and then also made 5.1 plus about $33,000 in excess of contributions. So then to flip back to the slide deck, this shows our pension and OPEB contributions, and then projected out to 2027. Pension contributions are expected to increase based on projections from MERS. So you can see that once you get close to 2027, that pension contribution is going to get closer to about $6 million, which is pretty significant. And then real quick, we'll flip back to the financial statements and cover OPEB. So I'll have you flip to page 64. So down towards the bottom of the page, you'll see the net OPEB liability. This actually decreased a little bit from the prior year. Prior year was 15.6 million. Current year was 12.7 million. The investment story for this plan was a little bit different because this is valued as of 12/31/23 instead of 22. So you'll actually see that you had a little bit of investment income just based on investment performance over the year. There was, if you go up towards the top of the page, there were some changes in assumptions which also decreased your liability about 1.5 million. And then if you flip to the next page, page 65, this is going to show your history of OPEB contributions, 1.35 million required in the current year. Actual contributions were about 2.37 million, so you had about $1 million in excess contributions, which is helping to fund that plan. Have you flipped to the next slide? Okay. So that's really all I was planning on covering in the financial statements and in the slides, but we're happy to answer any questions that anyone might have.
Does anyone have any additional questions? All right, thank you. Mr. Blunt, is there anything else that you think we need to cover presentation-wise? I don't know if you wanted to make any comments.
No, as far as the audit goes, no. I just would like to state Danielle Palmaville, who is here today and has taken a new job. I wanted to thank her for not giving me a 2-week notice and walking out in the middle of audit, but actually sticking around and helping get this done. I greatly appreciate that. So, what's that? Oh, and that's right. You haven't met Kelly. Kelly's the new Danielle.
Hi, Kelly.
So the new deputy finance director is Kelly Rao.
All right, well then, with that, I guess we'll move on to Mayor and,
Maybe I had one comment for Mr. Blum. It wasn't for our wonderful presenters from Plant Moran and auditors. I saw one thing not on there that's been on there many years, so I assume this is a good thing. The bank reconciliations thing's been a discussion for a long time.
Right.
So we're up to date now?
We are up to date, staying up to date. The one item you referenced with the single person with payroll actually was resolved in March, but it was there during the fiscal year, so the note had to stay. But that also has been taken care of.
Oh, good. Yeah, because that had been on there.
Yep.
Multiple times too. Yeah. Okay, cool. Sounds good.
all right. Anybody else? We'll move into council reports. Councilman DeMonico.
Thanks, Mr. Mayor. I guess thank you for coming out and presenting to us. It's definitely always good to see this and for you to point out the especially important information because, as I'm sure most know, if you're not a finance person, it is a lot of overwhelming information. Fortunately, you kind of know a couple places to look after you've done it a couple times, but it's always good to see from you. So thanks for coming out. Kelly, welcome. Nice to meet you. And thanks, Danielle, and Randy, and everybody else. That's all.
Councilwoman Pachadlik?
This was a lot to digest, I'm not going to lie. And I'm not a numbers person, so it was overwhelming. This is a lot of information, but I mean, I'm glad to see how things are going overall, but a little concerned about pension, so. That's all right.
Councilman Baker?
Thank you. Thank you, Plan Moran, for all this work. We know it's not an easy thing to do, or maybe it is for you, but you know, we just appreciate the hard work that you put in and putting it together, and how, you know, your presentation. So we appreciate it. Danielle, thank you for not walking out on Randy. Kelly, welcome, and that's it.
Councilman Harvey?
Thank you. You know, no matter how many times you do a presentation, it's always to different elected officials, and I know when you start to get up there, you're saying, oh boy, what are they going to do to me? What are they going to say to me? But you did a wonderful job. Thank you. I really appreciate it, and it keeps us right up to date, and that's what it's all about. Thank you.
Thank you. And I'll just say thank you to Plant Moran for coming and working on the audit, doing the presentation. Thank you to Randy and everyone else in finance for working on it. Thank you. Good to see you, Danielle, and welcome, Kelly. And with that, I'll entertain a motion to adjourn.
So
Moved.
Take your pick.
Yeah,
special meeting. I thought I'd do it.
okay.
I'm not making friends tonight. Councilmember Baker?
Yes.
Councilmember Curley,
Yes.
Councilmember DeMonico?
Yes.
Mayor Kleinfeld?
Yes.
Councilmember Poshadlik?
Yes.
Thank you. Meeting adjourned at 6:23.